Just checking you guys are in the Brilliant. Okay. Good evening to you all. Good morning, good evening, wherever you are in the world. Here we got in. All right, a few of you in. Good to see you all. Good to see you all. Okay, so we're going to do I don't know what this Fireflies thing is, but that's fine. We're going to do a little rundown of yesterday. Oh, hi Lynn. Good. Thank you for your hello because I was just I'm not 100% sure everybody can hear me or not, but now you've said that, I think we're okay. Right. So, good evening, Gary. We are going to have a look at the charts, but also have a look at what might move the what might move the markets this week. And there's some quite big things going on that we should certainly take account for going into next week. And the biggest thing is going to be to do with the yen. And I don't know whether you guys are aware or not, but there has been recent announcements that the US are going to help the Central Bank of Japan to effectively raise their currency price. So that really puts the yen in focus. So let's start with the yen because that's the kind of the biggest news of the day. This is the dollar yen over the daily time frame, and if we really want to zone out to see where this could go, we're going to need to go to the monthly chart. And you can see, look at really what happened. So this is the August. Sorry, this ended up being the July bar. That's pretty significant near the highs. So unable really to kind of break through these highs with any real follow through and momentum since June. June looked really good. This down here is still bullish in as much that the structure still exists. So there might still be some upside that we could see. The trend line is along here, which I will make black. Now, just let me know if this screen color is okay, because I've changed it to try and make it clearer for you guys to see. I had gray, but I thought it was a bit dark. So I've made it, I didn't want to make it white because I thought it would be a little bit too stark. So I've changed it to whatever color this is. I can't remember which color it is now. But if the chart doesn't look right to you, let me know and I'll change the background again. This is still in an uptrend. So if we think about the structure of the dollar yen, we have this base down here, which I will use my pointer for. We have a base down here kind of created through these three lows, created this base. And then we saw this trend line here taken out and retested here. So we see this kind of this situation where price is forming these lower highs, but forming no low. Apologies, guys. I should be okay for internet, but I don't know. Yeah, it should be all right. If it cuts out again, I'll be straight back in. I'm not quite sure what we missed, but I think they're okay. If it starts to cut out, and if the internet's patchy, let me know. I think it should be all right, but if it's patchy, let me know. Um, Great. Okay, fantastic. All right. So I was just talking about the structure here. The structure here. So we got these lows here, three lows, and we had a high up here, a lower high here, and a lower high here. So as soon as this bar happens, it changes structure. And we should have got a hint through these consecutive holds on this level here. So that was our hint that this chart was not breaking down. All that was happening was the price came from the high, came to this point here, and buyers came in. The sellers did come in to try and push into a lower high and start a new trend. This is a monthly chart, by the way. Start a new trend, but it didn't happen, and the buyers came back in. And then with this lower high here breaking through, the trend was back onto the upside. Broke through this trend line, tested the trend line, the trend was back onto the upside. So what we're really seeing is a situation now with this new phase of a trend going higher. So technically speaking, buyers are going to be attracted to this zone here. But, and I'd encourage you all to go and read this news, but the reports are that the US will help Japan stabilize the currency and potentially push it higher. I'm just trying to see whether there is anything that I can quickly show you on Bloomberg, just as a headline. There's nothing on Bloomberg as a headline that I can see, but you guys can find it. If you go and do some searching to see the US is looking to support Japan in strengthening their currency, and you will find it. So if we were looking at this on a monthly, we would be certainly looking at buying at this stage. And I think going into early next week, that may well be the case, because really what we want is an orderly move down. If this just collapses, then that is going to put the markets in a whole headwind of turmoil. So the speed of reduction of the dollar versus the yen, or the speed of accumulation of the price of the yen, is going to be significant to what happens for the rest of the market next week. If we see a huge collapse in everything against the yen, expect markets to collapse. If we see an orderly move down, expect the absolute opposite. Expect markets to do really, really well. So if we look now on the weekly, we can see a huge negative weekly bar. And if we tighten up the trend line here, is the weekly in a downtrend? Not quite, because this was the previous high. So if we're sort of analyzing correctly here, there's a higher high here. There's a higher high here. And there's a higher high here. So forget the bar, just look at the structure. There's a low here. There's a higher low here. And this would still be a higher low, right on top of the trend line. So in accordance to this, we would probably want to see dollar yen push around about 161, back up there, maybe even sort of like creating some sort of head and shoulders pattern. So kind of creating a right shoulder somewhere around here before it drops. And this would become some sort of neckline. That would suggest that the selling opportunity, which I think is on because of the news, is here. So you sell there, or a retracement maybe there, or a retracement off the trend line and there. So there's kind of three opportunities, but the first thing we'd really want to see is a rally in the first part of the week. And we'll have a look at the likelihood of that in accordance to the data in a moment. But the other option, of course, would be for this to break straight through and then try and pick it up. Now, this would almost be better, because this might well kind of run into this this level here, which would be still around about 160. So you're even looking at 161 or 160, but this whole band here is a kind of sell zone. So I'm looking at short for dollar yen and subsequently short maybe for some of the others as well. But let's think about why we might pick the dollar over the over anything else. And if we look at the data and really what happened last week, it was quite it was potentially quite significant. Let's see. Okay. So we're going to look at last week's data. So we'll check out the 26th to the 31st. And what was significant about last week's data? Does anybody know, before we start this, does anybody know what the strongest currency was last week? This sort of stuff is quite useful to know. What was the strongest currency last week, and what was the weakest currency last week? That would help us. Anybody got any ideas? No ideas? Okay. Strongest currency last week was the Kiwi. Yeah, Kiwi, nice. Thanks, Gary. And the weakest was the dollar. So when we're sort of thinking about that, what we're thinking is, or should there be a reversal? Now, the other one that of note is the Aussie. The Aussie was really weak last week, and actually, if you look at the data, it didn't really match the moves for the Australian dollar. So that almost puts the Australian dollar as a possible buy opportunity. We'll check out whether that's likely. So looking at last week's data, the most nothing really on Monday. No huge sort of data on Tuesday. This CB consumer confidence, that actually was quite significant. So if we look at some of the data, does it suggest, and this is really what we want to price data, does it match the fundamental and because if it doesn't, there might be an opportunity to reverse the price move. And if it does, there might be an opportunity to continue that price move. If we look at really what was going on inside the United States, this is usually a really good leading indicator. CB consumer confidence is useful for giving us where the economy is going. And this is a not only a miss, not a huge miss, but it was a miss. Not only weakening from the previous month. So that could be a little bit of a hint about where we might be going. Atlanta Fed GDP now is usually quite useful. Again, it was a miss and weakened from last month. But if we start looking now, look at these numbers from Australia. The numbers were okay. I mean, maybe sort of like if we're looking at inflation. And we think about inflation and think about a lot of the move that comes from any currency is to do with the central bank. You know, if we kind of focus our analysis on where the central bank may be sort of placing their currency, raising or lowering interest rates, and then traders trying to get out in front of that, or whether they react to it will be two different things. But inflation is a big factor, and we did see inflation just miss a little bit on off Australia. So it doesn't enable us to explain the slightly weaker inflation sort of coming up. Some of the growth numbers weren't too bad. You look at this on the UK. The UK's numbers were actually pretty good right across the board. And if we look then forget this, because even though the will move off the central bank rate decision, that will usually be priced in. So we can forget the actual announcement. This from New Zealand was massive. Look at this. This is one of the reasons. This is one of the ways we can explain the change in price of the Kiwi or the New Zealand dollar versus everything else. ANZ business confidence, massive. Look at that. To 56.1. Now, if we bring this on, so what we're looking at here is not an isolated number. We're looking at an isolated change of the number. That the change in the Aussie inflation was there, but it was relatively small. The change of CB consumer confidence from the United States was there, but it was relatively small. This is massive. Look at the jump here, and look at the jump that we've seen since the 30th of April. Huge jumps in business confidence in New Zealand. So we can explain the move through this. The question now comes in is, are we nearing a relative peak? And if we look back at these numbers, the highest it's been is 73.6. So it's within to here. We can see that the number it's currently at is relatively high. So the question now will be, would traders now start to assume that the economic picture has peaked, i.e., do we now start taking profits on the Kiwi, or is there further to go? Where this number is, it's near the higher end, so you'd sort of have to say, well, there could well be a bit of a slowdown here in this particular data set, because going right back to 2006, it generally speaking is not this high. This is sort of like where the number is here. That's one of the highest numbers that we've seen in nearly 2 decades. So I think that there could be an argument to be made to say, well, maybe we might start to see some profit taken on the Kiwi, some analysis, some assumption that maybe the economic all currencies are cyclical, and maybe the cycle in the Kiwi could be starting to slow down a little bit. It might be that it sort of stays up in these levels for a little while, but there's still maybe some profit taking. But that's still a huge factor. So we can explain the move a little bit through ANZ business confidence being the biggest beat of the week. So we can look out for these, and then we look out for things like what's going on in the yen. The 2-year JJB auction 1.483%. So this is like a look into where the bond market traders are expecting the Japanese yen to go, and they are saying that this is almost 1% should be value wise. So that is really kind of telling us as well that there could be some more juice in the yen, the move for the yen, which is great. We just need that chart pattern to kind of like give us that. Unemployment numbers. So generally speaking, the eurozone was quite quite solid. And if we look here and look at the vote rate hike, three of the members were voting for rate hikes. That's pretty hawkish. But Governor Bailey came out and basically said, don't expect us to raise rates, the situation factor. Now, overnight, we are starting to kind of hear that Trump is holding back off another attack on Iran, and suggesting that there may be a deal. We've heard this before, so we can't kind of get too far in front of it, but it would suggest that as the markets open up tomorrow or later tonight, that there will be some confidence come back into the market, which again really kind of enforces that Aussie, that kind of reinforces the Aussie move to the upside. We can make given the fact that the Aussie has had a decent sell-off, then the value is really in play. So that's going to help anyway. The move in, maybe not bombing, the stopping of the bombing, and also that will feed into inflation. So a lot of the inflation narrative that we've got in the market right now is because of higher food and higher energy costs, and the food will be related to the energy costs because it needs to move around the globe. So if the energy is so we can expect maybe WTI to start to come down, Brent crude to start to come down, then that will also negate the need for central banks to raise interest rates, because inflation may well be a little bit more tame. So we can assume that as we go into the week, not for the rest of the year, but we can assume that as we go into the rest of the week next week. That will potentially promote the Kiwi, to be fair, and we know this narrative is going on with Japan. Now, what we really want to see for next week is, now the biggest number from the United States was this GDP number. Look at that, massive miss. So we got two big changes, and we were talking about the Kiwi being the best performer, the dollar being the worst performer, maybe along with the Aussie. We can explain the reason for a bad US economy by saying the previous was 2.1, the forecast was 2.1, and the miss was notable at 1.5%. So we're talking about a 30% reduction in the from the previous GDP number to where we are now. So that is significant. So we can sort of say that the US economy may well be going through a point of weakness. Now let's see if this brings up a chart for us and see where this is kind of in relation to historical levels. Getting a bit low. It's getting a little bit low. If we kind of like go right back to 2022. Oh, it's not, we can't really see that very well. Let's go to 2020. No, it's getting a bit low, but you can see that this is starting to not get, it's nowhere near negative by any stretch, but it is weakening, and it is kind of like one of the lower numbers of the positive numbers. So we can see some weakness coming in for the dollar, which means that we can also maybe look at some dollar weakness as well coming into next week. The rest of the data for next week and see what we'd see moving the market. So straight away we're going to see numbers from Japan, and numbers that tend to move the Japanese yen as well. A BOJ summary of options and this current account number, that is potentially a market mover. So we really want to see what these numbers suggest, and there may well be some initial strengthening or weakening depending on sort of like how that number comes out. It is unfortunate in many ways that it literally gets delivered when the market opens, because there's almost no way to react on that. And when you kind of consider to get into, so this I would ignore from a personal level. I would ignore trading it, but I would just see how the market reacts. Then business confidence from Australia is the biggest number. An RBA rate decision is another big number. We've seen that inflation come down a little bit. So we might just see this you might see this rate decision delivered, and then maybe we can start to look at buying the Australian dollar, maybe before we're taking any trades on the Aussie. This is where the numbers get interesting. CPI from the United States. Now, if the dollar yen has rallied into CPI and CPI comes in at 3.5 or below, which it could, then we could see that dollar yen trade come into play. So Wednesday, it could be a turnaround in the market. We've got to be careful not to trade too early and hold through positions, because if you look at what happened last week, and I'm going to bring in, let's have a look at the pound dollar, and we'll look at it on on an hourly is fine, because we can see the whole week. Look at what happened last week. And I'll mark off the first bar of the week. Which is here. This is where the week started. And it wasn't until 2 days in that we saw the actual daily bar confirmed. So if we were trading thinking, well, for the week we're going to be going down because we're suppressed here, then we would have missed this. And the week actually ended up positive on the pound dollar. And rightly so. When you look at the data, rightly so. This really was the kind of trigger, and this trigger came off the back of that GDP number. So where it comes in next week, my first assumption, if we start to look through these charts, my first assumption would be that price could actually go either way, because there's a little bit of room to the upside, but there has been an aggressive move. We might start to see a little bit of weakness into the early part of the week, but then when that inflation data hits, we will probably see the proper move. And the inflation is in line or higher than expected, and pound dollars here, weakness. If the pound dollar comes down first and that number is lower, we can expect a rally. And we got room for the rally. The question will be, when do you get in? Well, if you can see a chart pattern form, then you've got this much room to get in. If the price just explodes to the upside and hits that upper resistance level, you haven't got a chance to get in. So it's going to be chart dependent, and it may well be also dependent on how aggressive that number actually shows. So we're really kind of like focusing in on this CPI major point next week where the markets start to move. Doesn't mean you can't take advantage of the first 2 days, but I would close positions personally. I'll be closing positions probably before it, or certainly reducing risk, taking some profit. So you might see a gentle market the first few days, but then looks like Wednesday we're going to start to see some genuine moves. GDP from the United Kingdom pound dollar chart, and we got some PPI. Business PMIs would certainly suggest that we see another move to the upside with business PMIs with the Kiwi, depending going to be kind of filtered straight through from that confidence, but we will see. But it does suggest that the Kiwi could still be strong at some point next week, not necessarily the whole week, but at some point next week. However, in saying that, now opening up the chart, this is very high. So I have to be honest, my instinct would say fade the Kiwi next week. That's my instinct. And the reason for that is that we've seen a big move in the Kiwi, and we've seen some of these numbers kind of hit their peaks or near their peaks. And that usually suggests that cyclicality would push it in the opposite direction. Now, if that was the case, then the question would be, and I quite like the Aussie, but then the question would be, what would we be looking at maybe Kiwi trades against? Well, let's have a look. Kiwi yen is an obvious choice because of the intervention by the United States. I mean, it's a nice chart pattern, but let's have a look where the advantage comes in. Really, it's crossing under that trend line. This is a weekly, by the way. So you cross under that trend line. Is there another one there? That could be an opportunity. So if you look at these charts off a technical basis, what we've kind of got going on here is a decent trend line. There, and somewhere sort of like in here. I might tighten that up a little bit. But there, that would suggest that we have enough touches for a trend line to be in existence. I'm going to tighten this line up just so it touches here. That's even better. And the reason it's better is because of this here. So we've seen price get above that level, but not able to hold that level again. So coming down and popping up here would be a sell zone. Whether that happens is going to be tricky to know, because as I say, the speed of the move of the yen is going to tell us quite a lot about how the market feels about the announcement that the United States are going to help Japan strengthen the currency. But this would suggest that if we do get any kind of rally in the Kiwi yen, then we have a sell in the Kiwi yen. That's what I'd be looking at. Now there are other trend lines here to charts have got multiple levels that you can take advantage of. So let's have a look at what that might mean. And I would look at that area there as a potential target, and I'd go down to a shorter term time frame to see if there's another trend line. That's big spot. Now, let me just see what that would give us if we were on longer back to longer term time frame. So I've marked off the kind of price zones that I'd be interested in for next week. And if I go to a daily and I delete I'm going to put this in here and just delete some of the other levels here. There would be enough room. There'd be enough room. So I'll be looking at around about 94 for the Kiwi yen for a short, but all the way up to 95, I'd say. So this kind of area here is the sell zone, which means that you can't put stops anywhere at this point. Stops would be up here, but this sell zone is quite wide. It's quite wide. So if that was the sell zone, you get the entry here. Talking about 140 pips. Now that is still an achievable trade because the low down here is talking about 2,400. Sorry, 240. So you've got 140 pips up, 240 down. So it's not quite a 2-to-1, but it kind of gets us in that zone. And of course, the higher it goes into this sell zone, the better. You know, the higher we can kind of like get into that short, the better. And I'd probably be looking at maybe some of these numbers from New Zealand, possibly leveling off a little bit. The driver from what's going on with the United States and the Japanese yen. Kiwi Swiss, I'm not sure about that. Be quite as interesting. I think pound. Let's just have a look where we are on the pound Kiwi. It would have to get back above that trend line. But if it did, you know, if we start to see these moves, and obviously the chart is going to be really helpful here. If we start to see this kind of come back above probably around about 2.3 on the pound Kiwi, I'd be interested in potential longs in the pound Kiwi as well. So there are a couple of options now. That the other one that I suggested as well was the Aussie. Now we'd want to see some decent data come out of the Aussie to enable some kind of catalyst to get in. Now, is there much? We got few things, but nothing hugely significant. If this business confidence is positive, then we do have the Aussie to trade, and that might be enough. You know, the fact that it's quiet for the rest of the week is probably quite useful if we can see some decent business confidence numbers, and I'd really want to see those. Not so worried about the rate decision. I think when the rate decision's cleared, that would probably just open the door for, as long as they're not going to lower interest rates, which they look unlikely to do. But that would open the door for an Aussie rally, and of course we could sort of have a look at it against the dollar. Yeah, it looks okay against. Yeah, it looks pretty good against the dollar. Look at that. So we got a decent engulfing body there, finishing on the highs. We've managed to kind of not quite break through this area here, but we do have a very suspect but evident trend going. There's a higher low, and there's a higher low. I'd say that's the high, and there's the higher high. So we're in the area where there'd be an opportunity to trade, but we probably want to see or certainly I'd want to see maybe a rally and a pullback. Taking advantage of the first rally would be fine, but stops So I'd be interested in the Aussie dollar for sure. We've seen some, weaker GDP sort of data coming out of the United States. I still think that there might be a potential follow through from that. I don't think that there's anything hugely. I mean, this CPI number is the big thing, but I don't think there's anything hugely major after that from the United States. So it might be that we're waiting to trade until Wednesday, and then we can get on board. But we just want to make sure that we're patient with them. You might get a setup early, and my bias would be weaker dollar, stronger Aussie, possibly weaker Kiwi, but you got to be careful with that one. Stronger yen, and if there are setups that suggest that we've got enough room and safety to get into those trades, absolutely fine. If there's not, I would allow the first couple of are still achievable and are there. However, if they have not come before Wednesday, then we're going to need to look at the data and see whether that move still suggests it could happen. So that the CPI data. So we got a kind of few things to consider. Okay, well, I will wrap it there. Unless anybody's got any questions or any comments that they want me, or they really want to comment on. Sorry, PH, I've just seen that your Swissy as the weakest. I didn't think it was the weakest, but you might be right. I thought it was the dollar. Well, let's have a look. Let's have a look. How did the dollar Swiss end? Yeah, I think we are. Yeah, see, this is the end of the dollar. So the dollar. The only one I'm not sure about actually is against the Aussie, because the Aussie had a pretty bad day of it. Pretty bad. Yeah, it's even the Aussie. I think it's going to continue. I still think that we could see some dollar weakness. A lot of what was happening as well is that because of the situation in Iran, confidence favor as long as everything else. If this is going to hold, and this is always a factor swirling around the market right now. It almost doesn't matter that we've got certain. This factor swirling around the market is the conflict in the Middle East. If it's true that the United States are at the table, and the reports are that negotiations are going very, very well, not just well, but what Trump's like, he sort of overemphasizes it. If it's true that it's going very, very well, then we might also see some profit taken from traders off the dollar as that. Looking at some dollar weakness next week, could be against the yen. That carry trade is the biggest thing as well. If there is some genuine support from the United States for Japan, there is a huge unwind that could happen on the carry trade. And if that unwind takes place aggressively, then we could see carnage in the market. We won't just see it in the yen. It will be all over the place. So very careful in the early part of the week. We really need to see what the reaction market off these data releases. Off the news about the United States supporting Japan and the central bank. If they that's the sweet spot right there, 160.50, something like that. That looks like a decent place to short this one. But if the market just collapses the dollar and we see the yen, we've got to be hyper careful, because we don't know how that's going to then filter through to other currencies, and I would suggest allowing it to calm down a little bit, which it will, and maybe waiting until possibly the middle of the week before we trade anything anyway. So we've got lots of things to consider as we go into next week. But the first thing to consider is this announcement from the United States about Japan, about the Iran war. So probably some gaps are likely as we kind of go into next week. Right, you guys got something from it, and you've got a decent idea about what you're going to be doing next week. There is certainly some headwinds and some obstacles to get over that are beyond the data, and more to do with announcements. But I think if we just sit around just for a little while and watch the markets, we should be in pretty good shape, and we should be okay. But my dive in until you've settled. Okay, have a good week to all of you, and I'll